So just taking a look at the total cryptocurrency market cap, let's go over this week and then do an overview of what I was seeing today that gave me kind of a supportive environment to take the trades that I took today. I just closed the position, made about 1,500 bucks in, I don't know, maybe two hours. So first off, right off the bat, today we're going to be just kind of doing a analysis. We're going to be doing an overview of fundamentals, kind of breaking down for you guys everything that I've been laying out for you all. I hope though, for those of you individuals who are paying attention, the insights that I'm giving you all are thorough and clear, and hopefully I'm making a successful attempt at showing you guys that this information can be applied properly day after day after day, and that there's people that guard the gates of this type of financial accuracy in the form of retail traders on the internet that'll tell you, oh, you shouldn't trade news. Oh, you can't have a 90% plus win rate. Oh, you can't do this. You can't do that. If you feed into that I can't energy, then you will replicate those I can't results. And so anytime you come across these uneducated people on the internet that bring up red flags that you're not really too certain on, just ignore them and move along. Um, Somebody just I think it was Carlton, just mentioned being in this community, um, and giving these clear insights. And so I'm trying to do my best as not only an active market participant because I'm day trading currently, but also rapidly piecing all this information together for you guys before these moves play out in the market. So that way you guys get timely, accurate updates. And it's been a pretty crazy journey for me to be able to do this for you guys live every single day, and just see how accurate it is. So, in today's video breakdown, I want to do an overview of this week, take a look at some things that created some sell pressure in risk assets. I want to go over my intraday position on Bitcoin today, which is playing out exactly how we analyzed it to play out yesterday, given the market environment. Then also updating you guys in the chat ahead of time, 30 minutes in advance before the move played out. Actually physically drawing lines on my charts for you guys to see how just easy this is when you understand price action coupled with fundamentals with institutional delta levels backing clarity for you guys in the form of technical analysis, how just miraculously easy this is over time. It's not easy at the beginning because there's a whole bunch of jargon and vocabulary you have to adjust to. You have to be able to self center your focus and your attention and your energy on not only all the market movements, but everything you have in your personal life. But hopefully I'm showing you guys that over time, you know, it's not complicated, and it will continuously get easier for you as time progresses, just as it's easy for me now. All right. So starting here just real fast, this is the Bitcoin trade that we'll break down towards the end. We'll full circle this. I'm always trying to give you guys timely updates before things play out. I started off by dropping my fundamental piece today at 7:47 a.m. By the way, um, the 7:30 a.m. to 8:30 a.m. window is usually where I try to give you guys a whole bunch of analysis and things that I'm looking for in the morning. New York session trading doesn't really start to gain volume and volatility until 9:30 a.m. Eastern. So my trading window, if anybody wants to write this down, where I go in and I look to execute trades is usually from around 8:30 a.m. Central Time to about 12:30 p.m. Central Time. And so that's about a 4-hour window that I look for trades throughout the week. Outside of that window, I don't really care what the markets are doing, which is another reason why I'm so accurate in my trading approach. Because think about all the time that an uneducated, uninformed retail investor tries to go and apply themselves to the markets when the markets are in no man's land, when there's no real solid price action setups. They're just trying to buy and sell all over the place, and instead take a strategic approach Give yourself a time horizon to say, okay, this is the window that I have to trade. For me, that's about 8:30 a.m. to 12:30 p.m. my time, and that is usually when the most volume and volatility takes place during New York sessions. I'm going in, I'm looking for buy confluences, which I went over in yesterday's Zoom call, at strategic delta areas. And then once I see those setups applying risk properly and only risking, right now I've only been risking a 1/4% of my capital, right? Um, so yeah, very simplistic. Just a little tiny note to jot down, put a little tiny sticky note trading window from this, right? And only apply yourselves in the markets, exposing your capital at that specific time horizon. If that time horizon for you fits better for your schedule during Asia session or London session, then adjust accordingly, right? So today, I sent this screenshot for you guys, and I said this was at 9:28 a.m. What I'm looking for to see buy scalps to see if buyers can overpower sellers and push through these areas, and if not, and sellers overpower buyers, then I'm done for the week. And I physically drew out little tiny scalp examples of what I was looking for. About 30 minutes later, the move started to facilitate and play out. We got a pre-engineered low, sweep beneath that low of liquidity, bullish move, higher lows coming in after that led to higher highs on the fractal time frame. We even got a triple moving average crossover right there in that area is where I entered. And now you can kind of see where price action is at given the analysis that I gave you guys. Just looking at Bitcoin real fast. Let's open up this chart. Bitcoin has completed that overall schematic that I was looking for on the lower time frames, right? So nothing extensive in and out of the markets, very simplistic, not overcomplicating things. Now I want to go over fundamentals and why I was able to not only apply technicals properly in advance, but then break down fundamentals in a way that kind of supported my bullish thesis, even in this uncertain market environment. That's the thing you have to understand. Every single day, the fundamentals are going to change. Every single day, it's going to seem a little bit too messy to piece together. But if you really truly understand what drives market demand and what drives outflows in risk assets, is relatively simple. Okay, remember in previous calls, I told you guys that if we don't see any new announcements that spark fear, uncertainty, and doubt, the most likely outcome was that the crypto markets already priced the worst case scenario in, and we were going to stage some form of either sideways price action or a bullish recovery. I know for a fact I said that, right? So let's take a look at the overall week, starting with Monday, Tuesday, and Wednesday. So the first half of the week, and then we'll get into, sorry, excuse me, Monday and Tuesday, and then we'll get into the second half of the week, Wednesday, Thursday, right? Because tomorrow's a holiday with Good Friday. Banks will be closed. Certain trading markets will be closed. I think futures is going to be closed. Crypto will obviously, of course, be open, but we're probably going to see less volume and volatility, considering that most market makers will be on an extended holiday weekend. However, that could possibly not be the case depending on announcements and major updates surrounding tariffs over the weekend, but we'll get to that. So, just taking a look at the total cryptocurrency market cap, let's go over this week and then do an overview of what I was seeing today that gave me kind of a supportive environment to take the trades that I took today on Bitcoin. I just closed the position, made about 1,500 bucks in, I don't know, maybe two hours. What time is it? 11:42, give or take. Yeah, 2 hours. Not too bad, right? I'm not flexing. I'm not here like, oh my God, I'm a millionaire. No, it's just, that's my rent, right? Super simple. So starting at the beginning of the week, all right, without looking at my charts, can anybody tell me why we had this massive extensive sell-off starting on the 15th of April, which was Tuesday? Does anybody remember? We kind of talked about it yesterday, but I just want to give you guys a broad overview.
News from the EU and tariffs.
Absolutely, right? Very plain and simple. That was the only real crazy breaking headline that started to try to shift the optimistic market perspective from the previous week, right? We had on Tuesday, the EU had some things to say back to the United States surrounding trade negotiations, and those trade negotiations made little progress. Obviously, of course, seeing those little tiny key vocab words, little progress, no progress, stalled progress, anything that does not show improvement on the current trade environment is obviously bad or seen as pessimistic, right? And so, of course, as soon as that announcement was made, I don't find it a coincidence, but price was at a premium, right? I mean, come on now. As soon as prices at a premium, all these breaking headlines started to drop of the EU expecting US tariffs to stay for a prolonged period of time as talks made little progress. You can see right here one of the breaking headlines from Bloomberg. Okay. Shortly after that, the market had declined, retracting all of its gains from the previous week. However, what I noticed is that we failed to start to break previous bullish areas of interest or demand areas or areas where market makers were previously aggressively buying from, particularly in this bullish leg here from roughly around April 11th, which was a Friday, up into the most recent or relative high at about 2.69 trillion, right? So from my perspective on the higher time frame, this is the hourly and above, I was seeing this as we're kind of still operating in a bullish environment as long as no overpower sellers or no overpowering sellers come and take out this previous bullish move that put us in this current range that we're operating in now, right? Then throughout the remainder of the week, this was yesterday, we had Jerome Powell speak. All right. Now, Jerome Powell, we're going to break down kind of what he said because what he said left markets relatively uncertain, right? So you can see on the day of Jerome Powell's speech yesterday, looking at the dates, this was an article from April 17th. Tariff wounded stock finds no balm with Powell's remarks. So, what does this mean? What did he say that weighed on market sentiment? If you go in and you look at the time that he started speaking, it's so crazy. Again, I'm showing you guys this stuff is not coincidence. The time that he started speaking was the exact time yesterday that the crypto markets and Bitcoin were at a premium, right? From where previous sellers were coming in at. He started speaking. Markets gathered his remarks as uncertain. We know uncertainty tends to weigh on risk assets, and buyers took profit or sellers slightly overpowered, whichever way you want to look at it. And yesterday's price action was intraday bearish, right? Markets have since then recovered, which we'll get into throughout the rest of this breakdown. But let's just kind of go over what Jerome Powell said yesterday. So here we have this article, and I'm just going to read some highlights. I have them color coded for you guys. What's in red is relatively bad for risk assets, which is why we saw outflows yesterday after Trump's remarks. Whatever is green in this highlight is positive for risk assets, and whatever is yellow is relatively neutral. So, starting here, investors who may have been hoping the Federal Reserve is poised to come to the aid of tariff rattled markets took away an unwelcome message from the central bank's chief on Wednesday. That is key vocabulary right there, an unwelcome message. Keep in mind, markets don't like uncertainty. Investors fear, there's another key vocabulary word, continued elevated inflation will hamstring the Federal Reserve, which would typically cut rates to shore up a weakening economy, but would be reluctant to do so because of fears it would lead to surging inflation. Investors said Powell's comments were more hawkish, there's another key vocab word, than expected for markets that have been whipsawed in recent weeks by President Donald Trump's sweeping tariffs, which are easing concerns about a looming economic downturn. I think the markets were hoping for more dovish signals from the Fed than what they're getting, said Michael Arone, Chief Investment Office Strategist at State Street Global Advisors. And he did not provide that dovish tone, right? So all of that yesterday was, again, one of the reasons why the remarks from Jerome Powell yesterday weighed on risk assets. He kind of pushed back on rate cut hopes. He mentioned that we could possibly see higher inflation and a deteriorating economy in the prolonged run, right? The later on down the road type horizon. And that usually tends to give an environment where markets start to price that in, right? Because the markets are always 10 steps ahead of everybody else. They price information in. Continuing down here, traders on Wednesday did keep bets on the table for Fed rate cuts this year. That is positive for risk assets. And yet another reason why I was telling you guys yesterday that we're still hovering in a bullish environment if we can make or break these previous demand ranges, right? Keep in mind that right now it seems like the uncertainty is heavier than the optimistic perspective, but still some underlying optimism remains, which is why we're seeing every single time the market sells off, buyers come back in and try to defend their positions because they're holding on to the narrative that the Fed's going to eventually cut rates, which is relatively supportive of risk assets. So one of the reasons why I'm still seeing some underlying crypto strength. In yellow here for a neutral kind of leaning comment. Powell also made remarks about a Fed put, where the central bank will step in if markets plummet. That may have spooked markets, investors said. And when asked if there is a Fed put, Powell said no, while offering an explanation. He said that markets are struggling with uncertainty and volatility, but functioning and orderly, right? So even though he mentioned uncertainty, you can see that key vocab word here, he said markets are still functioning relatively orderly. Okay, so that kind of eases back or dials back that uncertain tone right there. So I put that in yellow as kind of a neutral remark. Powell's comments could be interpreted as they don't necessarily rely on the Fed put, meaning don't rely on the Fed to sort of bail us out of this situation. That is not good, right? Markets want to see confidence that the Fed is willing to bail the markets out, pump stimulus into the markets, inject liquidity if economic conditions worsen. And when Jerome Powell said this, it did not back the market's confidence that that would take place. We obviously, of course, know that that is the most likely scenario, but the markets would like that verbal confirmation from the head of the Federal Reserve. Last but not least, it says here some investors said Powell might have just been confirming the scenario markets were already worried about, a slowing economy combined with inflationary pressures, which is pretty much exactly what he reiterated. He's suggesting that it is going to be a potentially difficult economy if the tariffs stay at these levels. So I highlighted that last piece because if we see moving forward any announcements that tariff implications or percentages, for example, this tit for tat tariff between the United States and China start to come down and they come to some agreement that is way less percentage tariffs in terms of what they have established now, which is like well over 125% for each jurisdiction. It's insane. So anything less than the current environment would be seen as optimistic, which is why I want to end this here. Moving forward, if we see any new announcement of them lowering the tariff percentage implications, that could be positive or seen as some type of positive announcement. So just be mindful of that. All right. All right, so moving on to kind of today. All right, starting with the economic data, which I gave you guys a full fundamental breakdown on, going over the data points from today and how it kind of impacts the markets. Long story short, to keep this data in a nutshell and not go too thoroughly through it, what I was seeing is that it still keeps rate cut bets on the table and does not show any excessive signs of economic deterioration. Those are two key things that I like to look for when I'm looking for buy positions intraday for risk assets. I don't want to see any new recessionary fears sparked by economic data, and I want to see the markets continuing to price in a high probability of rate cut bets later on this year in 2025. And this economic data proved that to be the case, along with other economic data that we got this week as well, right? Markets are still pricing in a high probability of a Fed rate cut, which you can go check on the CME Fed Watch tool if you don't know where to find that at. But you can also see it sprinkled in mentions of certain documents and fundamentals. So that was one fundamental factor today backing why I was looking for intraday buy positions. The second thing is we had some Fed commentary. Keep in mind, in previous reports, always talking through these if-then scenarios, I mentioned to you all that if Fed speakers hint at future potential rate cuts, or they say things that reinforce that the economy is still proving strong or resilient, which tends to dial back those recessionary fears, those would be comments that would be supportive for risk assets, right? So here today, we saw Fed Williams. Live squawk, you can see right here, one of the things that Fed Williams said today is that the economy is still in a very good place, even amidst the uncertainty. And so that's now the second or third time this week that that's been reiterated. And we can see that in terms of price action. Again, underlying support in the digital asset landscape is every single time we see a sell-off in risk assets, buyers come back in and facilitate buy orders from where they previously bought from. This leads me to believe that if we went and we looked back at the end of last whatever week this was, because this was a Friday, Saturday price action, there was probably some type of some supportive fundamental breakdown that eased recessionary fears. And now throughout the week, this week, we've seen those easing recessionary fears through commentary from Fed speakers, right? They're still saying that uncertainty lingers, but the economy isn't as bad as economists are projecting, at least for right now. That could obviously, of course, change, but right now, the data is leaning more so towards that, we're not in a recession quite yet. We could possibly be if things change and worsen, but the data is saying otherwise right now, right? So that was another thing today. Fed comments. So far we had economic data supporting rate cut bets and slightly easing recessionary fears, or at least at a minimum, not adding to the recessionary fears. My second fundamental support was Fed commentary, not necessarily weighing on rate cut bets, not adding to them, but still showing some signs of economic stability in terms of where it is that they think the economy currently is at. The third thing was we had some positive, not necessarily net positive announcements, but not negative announcements. I would say that these are leaning more so towards optimistic announcements. Trump had very productive calls with major jurisdictions, for example, the president of Mexico yesterday, and then also mentioned that every nation, including China, wants to meet. Here you can see another article. This is just from today, April 17th, that China is open to talks if the US shows respect and names a point person that they would like to speak to. And then here you can see Trump hails big progress in Japan tariff talks. This is also an article from today, April 17th. This article, ongoing talks right now, I believe, in Italy between major jurisdictions like Japan, the EU, the United States, and others, is taking place right now. And you can see him mentioning big progress is taking place. And so I saw that today, these three underlying fundamental factors, some slight progress in the tariff implications or environment, or at least at a minimum, nothing in terms of new breaking headlines weighing on market uncertainty, fear, and doubt, and driving excessive demand for safe havens. Even though there's a safe haven demand right now, I saw no new breaking headlines. I saw Fed commentary supporting rate cut bets and dialing back recessionary fears. And I also saw supportive economic data doing the same thing. And so piecing all that together, that was my fundamental backing today. So hopefully breaking that down for you guys made it clear why I still remained intraday bullish, but also was able to react if need be. And I stated that for you guys in my analysis, along with the report this morning, right? I always try to get you guys to see that things could change on a drop of a dime, and you have to be willing to react to that change if it takes place. So now in terms of technical analysis, to go back to Bitcoin, very simplistic. I won't waste too much time breaking this down, but if we turn on the session indicators and we tap into the CYPRX 2.0 ideology coupled with the delta zones, what are we looking for if we're going to be buyers? We want to be buyers from where previous sessions bought from. Well, yesterday during New York session, when Jerome Powell spoke, this was the market sell-off, and we can see that buyers came in from where price action was at during London session, and they bought. Rolling over into this new intraday candlestick, we can kind of see where the directional bias is. Asia session, they sold and they bought, passing price action over to London. London session did the same thing. They sold before they passed price action over to New York. They bought. Then today, during New York session, considering all the fundamentals that I just showed you guys and the higher time frame, thinking to myself that, okay, we're still in this bullish environment, operating at a higher time frame low or demand area, and we failed to see sellers overpower these institutional delta zones, break through them, and retest, making lower lows and lower highs underneath of them. So piecing all that together, all I simply did today was I waited to see if New York session would sell down into where they previously bought from during previous sessions. Sure enough, they did, which is when I sent you guys this rising at like 7:30 a.m. My analysis was that I wanted to see price come into these discounted areas and create some type of institutional schematic, right? A sweep of liquidity underneath a low, a reversal or buyer's intent, then buyers coming back to support or defend their buy positions and continue to overpower, leading to bullish price action on the lower time frame. Once I saw that, now jumping down to the lower time frame, we can see that price action to the freaking T. Right? Keeping in mind, I had the bullish fundamentals backing my analysis. Yesterday's analysis, which you guys can see here, this is our Zoom call from April 16th, 2025. I told you guys in advance what I wanted to see. I wanted to see that sweep of liquidity, reversal in structure on the lower time frame, a higher low come in and a retest to go in and look for positions at or around these institutional deltas, right? Sure enough, we got that price action to the T, right? So this is the lower time frame. You can see right here, we see a trap. We see sellers come in, liquidate all these early buyers here in this area. Buyers then come in defending their positions from where they bought from all the way back here during yesterday's New York session. Buyers overpowered sellers here and broke above these intraday sellers positions. And then we start to see higher lows come in, higher highs, higher lows. There's the pattern. That right there gave me the green light to say, okay, now that I see these things, these institutional patterns at delta zones, and we see supportive fundamentals, now I have the green light to expose my capital. It's then up to me to decide how much risk I want to take. For me right now, the environment that I'm in with my daughter's home and whatnot, I don't want to be high frequency freaking out about my position. So a 0.25% of one of my $200,000 accounts is what I'm willing to expose. I did that this rising, entered here all in this position with some buy stops above these highs, with a nice stop loss beneath the low. And my target was simply just the initial highs during New York session. Nice quick 1 to 1.5 risk to reward ratio. I'm still currently floating slightly in the position right now with about 200 bucks running. I closed out the initial position with about 1,500 bucks in profit. My stops are at break even in case the market reverses, right? Very plain and simple. CYPRX 2.0 to the T, fundamentals, institutional deltas that we all had well in advance. And just a matter of being patient, waiting, not second guessing yourself, anticipating the market moves, just being calm, cool, and collective, and understanding that all of these things as a whole matter in the results that you're going to get or gather from these markets. So, outside of that, that was my intraday analysis starting from the beginning of the week up until where we're currently at now. I haven't seen any new major breaking fundamentals from today's meeting with these trade talks. I would assume that if we do see any breaking headlines, any super positive announcements, definitely expect some bullish price action and some volume and volatility as we head into the holiday. That's where I stand right now in terms of fundamentals and intraday analysis. So let's kind of just do an overview of the total cryptocurrency market cap real fast.